Good morning. It's 9 a.m. here in Hong Kong, in Beijing, and in Shanghai. Welcome to Bloomberg Markets China Open. I'm David Ingles with Yvonne.
Our top stories this morning: Bitcoin whipsaws following as the SEC says its X account was compromised when a fake post appeared saying it had approved spot Bitcoin ETFs. Caution returning to markets ahead of Thursday's U.S. inflation data as hopes of a Fed rate cut in March begin to fade. And Beijing's envoy to Washington says Taiwan is the top issue for bilateral ties and sees no room for compromise with those advocating independence. So certainly it raises the stakes and really the anxiety leading up to this election, because there was that whole air raid alert that was sent around Taiwan yesterday, which did kind of spook the island a little bit over the satellite launch in China as well. So there's that we have to deal with. And then this whole Bitcoin story, which, wow, just the last couple hours has been just a lot moving.
Yeah, so the headline dropped from that post, not the SEC's post, because they've now pushed back on that. And then they had to reverse that. We'll get more details on that, certainly. Bitcoin is still up a couple of $100, but 47,000. I mean, of all the things it had to happen to, it was really this ETF and really Bitcoin really adding to the drama.
The irony, right? I bet all these, Bitcoin bulls are just kind of giggling a little bit about the fact that this, Gary Gensler has been talking about the vulnerabilities of online sort of activities, and then this happens to their official account. So.
Yeah, and the strongest case yet of what underscores that very view. Now, all that being said is we're going into today, and we also get to talk about the bond markets over in Europe and the massive demand that came through there. Again, this debate on whether or not this is an equity year, is it more a bond year? We're pointing lower ahead of the open. I think we're down 5 straight days going into yesterday, or 6 days on the CSI 300, effectively still near the lowest in about 5 or 6 years right now. The other story within the equity markets today is this pullback we're seeing in mining stocks as we pull back on things like iron ore, for example. We're flat in the benchmark. A couple of markets are coming online. It's a big week, suffice to say, when it comes to Taiwan. And we'll unpack that story and the latest there in just a moment or so. The FX markets, really strong day for the dollar, up against all in G10. Hence, we're trading near 1-month lows on the Chinese currency. When you look at the yen, there's an important auction today taking place, 2.7 trillion on 10-year JGBs, which take us straight into the bond markets. We talked about Europe. You have your 10s right now on your screens. Day 2 of a drop over in Australia. And, yeah, we're on the 10-year yield in China. We're now below 2.5%. There we go. Okay, Bitcoin, we talked about this. There we go. And, of course, we're back in backwardation in terms of West Texas. But, yeah, let's focus in on the Bitcoin story. Or is it the SEC story? Or is it
It's both.
Unauthorized access story?
We're supposed to hear some sort of final green light, right, this week. So let's turn to crypto now. Bitcoin prices, we talked about getting that whipsaw this morning following that post on social media site X. It falsely claimed that the U.S. securities regulator had approved the issuance of those ETFs. There you see that confusion right there. The pop, and then now we're seeing that drop. We're getting a little bit more stabilized here in the Asia session. Let's bring in Annabelle Jewelers joining us with the latest. Yeah, I mean, do we know it was a hack? Was it? What do we know at this point? What happened?
Well, we know that there's still a lot of work to be done to really get to the bottom of it. I think that's what you could say. When this happened, this post came out, so it was at 4 p.m. or just after 4 p.m. ET, which is 5 a.m. here in Hong Kong, and it certainly caught a lot of people in the industry by surprise. And immediately, people within the Bloomberg organization, journalists, were getting on the phone. They were talking with the ETF applicants, and we were getting this feedback saying perhaps they also hadn't got a heads up as well. So it was really a big surprise situation. And then a few minutes later, we started to get a sense, okay, maybe something's a little bit amiss here. And that's really what came out of it, because the SEC just in the last, say, hour or so has really given further details on what exactly happened. And they said there was unauthorized access, there was unauthorized activity, it's an unknown party, but it was a brief period where the account was compromised. And so there was a fake post that went out, as we said, essentially claiming that the SEC had approved applicants to list spot Bitcoin ETFs, and it also as well included some comments from Gary Gensler, what were purported to be comments from the chair, Gary Gensler. We know he's been a very high-profile critic of the crypto industry, but he also has taken to his personal account as well to say that it was unauthorized and that the SEC has not approved anything at this point in time. So we know the SEC, essentially, they want to just continue their investigations now, work with other government agencies, work with law enforcement, X as well. They're saying that they're trying to figure out really what happened here, although they did also tell Bloomberg that the SEC's main account is now secure.
Does it delay, derail the expected approval of this spot ETF? And, you know, if it does come through, it's kind of awkward to now make that announcement over X.
Well, I think you're going to want to have some sort of caveat or clarification.
What do you know? Is it real or not?
Real this time.
Maybe a countdown, 5, 4, 3, right?
Yeah, that's what I was actually wondering. How are they going to make it abundantly clear? But certainly you want to be getting perhaps something more official than a social media post to know that it's definitely taking effect. Look, we've spoken with a few different analysts, a few different Bitcoin industry observers or participants, and the bottom line really from this is that a lot of people are saying it's not going to derail. This thing has been 10 years in the making. We know the SEC, or what we've been reporting from Bloomberg, is that they are supposed to be chairing a meeting this week. They do have a deadline for the ARC-21 shares application that still stays in place. It's January 10, so we do need to expect something on that. Whether they could use this as perhaps a justification to push out the meeting timeline, perhaps, but the bottom line here is that we've really seen all the indicators so far telling us that we will have these spot Bitcoin ETF filings being approved, and we do know there's at least a dozen companies or applicants that have applied to list ETFs backed by physical Bitcoin or Bitcoin, not Bitcoin futures, in the US. So certainly something to be tracking very closely, and that deadline less than 24 hours away now.
Yeah, there we go. We'll be watching it vigorously. There we go.
As well.
Yeah. Okay, Belle there, of course, with all the latest there. Let's also talk about the big story this week is Taiwan and the upcoming elections. In fact, just days before the presidential vote, Beijing's top envoy in Washington saying that China has no room to compromise with those advocating independence for Taiwan. Let's bring in John Liu, our greatest China senior executive editor, joins us from Beijing this morning. John, good morning. And on top of that, lots of other anxiety, of course, and drama late yesterday. But let's talk about those comments first and foremost from the ambassador. What exactly did he have to say? What was the context?
Well, he was giving a speech. Actually, he was talking mostly about the state of U.S.-China relations. And within that context, he talked about the fact that China has no room to give any concessions when it comes to Taiwanese independence. Obviously, China claims Taiwan as part of its territory. Beijing has pledged to take control of Taiwan, even if it's needed to be done by force. Xi Jinping has said he'd rather do that peacefully. I think this statement is a reiteration of China's position. I think it is important, though, because we are so close to an election. We have one of the main presidential candidates, Lai Ching-te of the ruling DPP, has had a past of talking about support for Taiwanese independence. That is causing an extra level of concern here in Beijing, and I think that's what makes these comments that we got overnight more important than usual.
And John, I mean, what we saw yesterday in Taiwan, right? These satellite launches from China sent, sort of a bit of a frenzy here, where air raid, alerts were sent on everyone's phones, which goes to show the concerns around Beijing's interference into this national election before Saturday. Do we know, if anything? I mean, what happens if it's another DPP victory? What would be the Beijing response?
So I think with the satellite launch yesterday, that to me really underscored how much everybody is on edge before this really pivotal election on Saturday. And so we had an apology. In the text message that was sent out to the public in Taiwan, the English language version of it called it a missile. The Defense Ministry in Taiwan has since apologized for that. They said that was poor choice of wording. The presidential office in Taiwan has come out to say they do not believe there was a political motivation in terms of the satellite launch. I think all of the excitement that came along with that yesterday, I think that really speaks to how much everybody is nervous about what's going to happen next. And I think if we do have a presidential administration under Lai Ching-te of the DPP, I think that increases the chances that China, that Beijing will feel that it needs to take some sort of action, maybe military drills, some sort of evidence to show that it is standing by its bottom line, that it should not be challenged.
John, thank you. John Liu there, our Greater China Senior Executive Editor, joining us out of Beijing and the latest there. It's interesting, right? You talk about what has been troubling this Chinese market, and really there's multiple risks out there that people are starting to price in, and why we're not seeing any sort of foreign buying into this market, Dave. And you look at where geopolitics stand, politics and this Taiwan decision, this is the latest survey from our colleagues, that stands quite large, right? 27% of people we interviewed say that that's a big risk.
And I think you made a good point earlier in the week that, you know, the factors that you would think would, you know, create a floor underneath this market, one of which was, you know, is the weakness also down to higher rates in the U.S., and with the expectation that rates are going to go down, that even hasn't helped this market. So it's a laundry list, really, of, you know, in many cases, non-mutually exclusive reasons, which I guess speaks to the premium baked into this market. So, in fact, this is really one of our jumping off points. We have two fantastic guests coming up this hour out of the buy side to talk us through what their exposure is as it pertains to EM in China, and we'll be joined on that note by HSBC in a couple of minutes. Global private banking and wealth, their insights, their outlook for the year, the top themes for 2024. William Sells joins us in a couple of minutes, counting down to the open of trade in Shanghai, in Shenzhen, and here in Hong Kong. Opening bell 18 minutes away. This is Bloomberg Markets China Open. Good morning.
All right, we are taking a look at what's ahead here today. U.S. inflation numbers certainly be front and center here and really kind of dominate the narrative for the rest of the week as we count down to a lot of inflation numbers around the world as well. Let's bring in William Sells, Global CIO of HSBC, Global Private Banking and Wealth, joining us here in Hong Kong. Great to see you here in town, Willem. You know, obviously the inflation discussion is one thing, the growth concerns is another. I'm just wondering, how do you look at 2024 now after this stellar rally that we saw towards the end of 2023?
Well, I'm quite confident about growth. You know, especially in the U.S., I think the U.S. will remain resilient. The U.S. has outperformed expectations, you know, throughout 2023 in terms of economic growth. So we look for 1.7% economic growth, a little bit above consensus. Is the inflation picture that is a little bit more volatile, and that, you know, it is going to be hard to get to 2%. So I do think that in the short term you will get some volatility, but those are opportunities for us to buy on dips, because this is a year where we're still going to have good performance on both on the bond side and on the equity side. So we remain invested, but manage that volatility.
I guess on the equity side, do you broaden and even deepen your exposure already in the equity market, and where? Precisely?
Yeah, so in the U.S. in particular, we broaden that exposure. Indeed, there is lots of discussions, obviously, of whether U.S. stocks are overvalued. You know, the technology side is highly valued, I would say. If you sort of take an equally weighted index to take out that disproportionate effect of the Magnificent Seven, your valuations are actually in line with historical average, and also in line with what the bond market would tell you, which is important because that goes into your valuation framework. So we broaden it, and we're happy to broaden because earnings are relatively solid in the U.S.
How do you look at the bond market now? I mean, this rally that we saw in bonds, we're seeing a little bit of a pullback now. Are the risks now a bit more balanced when it comes to inflation and growth? And does that make extending duration still compelling?
So, yes, we do think that, you know, if you have a horizon of a few months at least, I do think that extending duration is interesting, because the first point is that the real yield is for the 10-year Treasury is at 1.8, which is almost at a 15-year high. You have two little spikes, you know, very briefly. But you don't need that real yield of 1.8 with this kind of economy. The second bit is, although the market overprices the potential of a rate cut in March, we don't think it will happen in March, and therefore you can have some short-term volatility. It is too hawkish on the longer-term, Fed dot. So the longer-term Fed dot 3 years from now, the Fed thinks we're going to 2.5%. The market thinks we're going to 3.3. So that can still come down. Yeah. So two reasons for us to be structurally positive on bonds for the year.
How much duration do I want? Do I go all the way up to 10, 15,
I think
20?
15 is a bit of a stretch. So it goes into your pension fund, right? And the pension portfolio. But so for, we would say the rate side is the area that is attractively priced for us. So if you go into government bonds, you can go up to 10 years. The spread side is not so attractively priced and not that generous. So for investment grade, we're up to 7 years. For high yield, we're up to 5 years.
Okay. How about this part of the world? I mean, obviously, there's still some wobbles in this Chinese market. How are you looking at EM in particular too now?
So there are opportunities in spite of Chinese growth probably flatlining for the year, and we mainly look at Southeast Asia and India. So India, both from a cyclical perspective and a structural perspective, the startup ecosystem, the digitalization, the services centers, etc., that are being built up. It is a market that is highly valued, but it tends to be highly valued because of the barriers to entry. And in Southeast Asia, Indonesia is an interesting market for us, also because of that supply chain reorientation, that value added, that you have there as well. So people are looking to diversify within the region, and those are some of the areas that are seeing the flows. South Korea as well, if the semiconductor cycle picks up as the consensus expects.
Taiwan and Japan, before we talk more about where China lies really in the greater scheme of things. What do you think of Taiwan? And what do you think of Japan too?
Taiwan, for us, a neutral scenario at this point in time. Japan is a market, also neutral from an allocation, but more from different perspective, because it is very hard to forecast when exactly the Bank of Japan is going to do what, because they certainly have a path where they are, I think, a reluctant hawk, if I want to call it that. But then at the same time, obviously, now you've had the earthquake shock. And that very strong negative correlation between the yen and the market means that, the Bank of Japan's decisions have a huge impact of where the market goes. So, most of our clients have a neutral allocation, want some allocation to diversify, but it's very hard to take a very strong view.
We're trying to get a lot of people. It's interesting you have a neutral take on Taiwan, despite, this tech cycle might be bouncing back. The U.S.-China conflict, post this election that's happening this weekend in Taiwan, I mean, are there certain global assets that might be rocked by those tensions?
So, geopolitical risk is something that comes up in discussions. Obviously, you also have the U.S. elections. We think that, they're we probably know the two candidates if the polls are right. And also, it's still until November that we will have to wait. So we would focus on the fundamentals, really, which are really inflation, growth, and the rate setting. So, indeed, as you were saying, off air, the inflation figure will be hugely important. Anything that is related to wages being more sticky, or potentially then on the geopolitics, the Red Sea evolution, those are more important because they can have an impact on inflation and therefore on rate setting.
I see.
Exposure to China. I think we asked you this this time last year, and I think we've asked many people last year, and they say it's cheap, but it's taught us cheap is not enough. What do you need to see to change your mind to China?
So we will need to see the earnings delivery. So earnings expectations for China are actually relatively solid, and for Asia generally as well, because they come from a low level. So I do think that investors, given that they have such low expectations, if these companies deliver on earnings growth, then you will see some flows coming back. So you've started to see some flows coming back from, for example, from Australia, from the Middle East, but not yet from Europe and the US. And I think that will, once those earnings are delivered, then people will come back. So for now, it's also neutral for us, waiting for that to pick up.
So waiting for the earnings. Are you waiting for policy? I mean, it seems like everyone's been waiting. This drip feed stimulus just doesn't seem like it's enough. now.
So policy for us puts a floor under economic growth, and that's already a very good starting point, I would say, especially, and that's why we have that neutral, given those low valuations as well. There are some areas that we like for example, some of the internet leaders, which are very local, and linked to the consumption. So it's more the consumer story that we like at this point in time.
A lot of investors, you would know that we're sitting on cash last year. They're going into this year, they're thinking about, okay, do I do bond equity? I think we answered that. How much more alternatives do you think people should take exposure to that as well, given this move out of cash and, this increased exposure anyway to alternatives we saw last year? Yeah,
I think alternatives are always an important part of a portfolio. For us, it's about a third of a moderate portfolio, if people can obviously live with that, sometimes lower liquidity. It's especially important at this point in time because bonds and equities have a very high correlation. If you look back at the 90s, it's the highest correlation. And that shouldn't surprise, because if the Fed is the one that really matters, their actions on interest rates will affect both equities and bonds, typically in a very correlated way. So you need to get the diversification somewhere else. But it's more than that. It's also about the opportunity, that is presented to alternatives because of maybe a small credit cycle, not a huge one, I don't think, but a credit cycle, obviously the interest rate cycle that also creates opportunities for them as well. So it's the opportunity as well as the diversification needs.
Is that still private equity, private credit?
Yeah, infrastructure.
Can I tempt you with a Bitcoin spot ETF?
No, it's not in our asset allocation because we don't know how to model it. It's still, what is it a riskier asset or is it a safe haven asset, for example? How is it correlated? Those correlations, go up and down. I would say private equity, private credit, also hedge funds. Not so much these CTAs, but the ones with a broad exposure, so macro, multi-strategy, and so on.
Have a good rest of your trip in the Asia Pacific. It's great to see you. William Sells there with his buys. Okay, try to get it in. Global CIO, HSBC, Global Private Wealth Banking. Right, coming up, there we go. Futures are pointing down. A full preview of is it Thursday? Their Wednesday session ahead. This is Bloomberg. Good morning. Right, welcome back. So the direction of travel and equity markets is down, with the exception of Japan, which, in case you missed it, the Nikkei 225 is now trading above 34,000 for the first time since March 2 of 1990. Apart from that, weakness across the equity market. There's weakness across iron ore and mining stocks as well. So, softer open, it seems.
You mentioned that 5-day skid when it comes to iron ore prices, which just goes to show how people are pricing and looking at this market, in particular this recovery in China, which continues to be elusive as we speak. And certainly, we did have a brief halt in that 5-day decline, thanks to these solar stocks, which we don't really know exactly what led to that sort of surge in the first place, but certainly we'll see how things go. But it looks like we are approaching and look at this open on Wednesday with a down arrow story. So you take a look at what the CSI 300 is doing. We're off some of those 5-year lows, but we're hovering around it. We're 0.3% to the downside here as well. Hang Seng also lower. Keep in mind, U.S. inflation numbers come out, so perhaps not much risk taking on the table until we get those data. And MSCI China, we're sitting around that 53 level here right now. What is selling is HS Tech here. What's bid up is still Chinese CGBs, especially when it comes to the 30-year. We're 1 basis point lower, but we're just about a whisker away from 2002 lows on the 10-year yield. Then taking a look at sectors, it is mostly red across the board, with the exception of some consumer discretionary, but that's just flat. There you go, just went red. Nomura had an interesting call. Ting Lu saying, look, quite likely.
When do we get it?
We might see that cut in lending rates next Monday.
Oh.
Ting Lu says.
Okay.
Yeah.
We'll need a couple of days for that.
In terms of what we're looking at movers here, obviously the crypto story continues this morning, just given that whipsaw that we saw in the price of Bitcoin on this confusion and whether we did get that green light on this spot Bitcoin ETF. Yeah, there you go. You see a bit of that whiplash there. Meitu, Shenzhen Form, Cintron Information, those are both lower. There you go. Bitcoin, though, recovering a little bit. after this whipsaw. But there you go. We're watching shipping stocks still very much in focus, given the geopolitical tensions, given what we've been seeing yesterday as well about the confusion around that sea passage in the Red Sea as well. COSCO Shipping came out with prelim numbers there, drop of close to 80% for the full year. That's why the stock's down here today. I mentioned about some of these steel makers in China, just given what we've been seeing in iron ore. And this deal, so KWG, they are reducing their stake in a property project that is also owned by Medea Real Estate, which is what's below there. So that's why you're seeing KWG down some 2%.
50% stake so they're getting $400 million from that.
Yeah.
Okay, broad equity market weakness. I'm just looking at my terminal here. So Shanghai comp down to 2020 lows, 2019 lows in the CSI 300. More outflows are coming through across the Stock Connect. Do you buy this dip? Nicholas Yeo, head of China Equities at Aberdeen, is with us here on set to talk us through his outlook for the year. Happy New Year. Nice to see you.
Happy New Year. Good to be here. Yeah.
Potential for a good year in China. That's your marching order. Investors have been battling with potential for years now.
Yeah, well, we are still constructive on the Chinese equities. Of course, cautious as well. There are still a lot of uncertainties this year. But if you look at the base case, I think the technical level that we are right now is so low that is not really justified given the very high risk premium. As well as things are starting, I know it's not, it's still a mixed picture. Yeah.
Are you scratching your head? Everything that might induce a rally is happening, might induce a rally.
Yes.
Cheap policy, but it can't seem to find a floor.
Yeah, I mean, I've been around the world talking to clients. People are waiting for the catalyst, which is the same for every investors looking for improvement on economics numbers.
Yeah.
But that should gradually come true as well. Don't forget that I know we don't have a bazooka stimulus, but we have had many stimulus.
Yeah.
Since the July Politburo, right? The government has turned on that front in terms of coming out with more stimulus. And some of these should gradually bite or should gradually have some positive effect on the economy. But of course, the elephant in the room is still the real estate. And without the real estate stabilizing, I think the confidence is not really fully back to what it was before.
Yeah.
So that is still, what is worrying a lot of investors. They prefer to wait and see whether there will be more support for the real estate sector.
So you mentioned 2023 property was the sticking point. Is it going to remain the sticking point this year, or is it going to be less of a drag?
It's going to be on a year-on-year basis because the real estate has become less of a contributor to GDP.
Right.
It used to be 25, 30%, but now it's more like hovering around 20%. So the drag is a lot lower, and then you have other areas, the non-property areas, that is hopefully helping to offset a little bit of that slack given up by real estate weakness. However, I think on the confidence side of things, I think investors are still waiting for that. But having said all this, don't forget that when I say the technical levels, the valuation is so low now, historically low. Versus MSCI World, we are looking at 2 standard deviation below MSCI World. Based on its own historical average as well, is more than 1 standard deviation below the historical average when it comes to MSCI China. And don't forget that there has been a big sell-off in quality companies, quality names.
Right.
So you have you can call it a double whammy, a double cut in high quality valuation. So when things start to stabilize, we feel that these quality names could even do better, much better than the benchmark, the general market. Yeah.
The previous guest we had out of HSBC talked about, they're waiting for an earnings pickup in China. So my question is, do we actually need an earnings pickup? Because it seems purely on price, if there's even a small move back to this reversion to mean, that's big enough for a big year.
That's where I'm coming from, right? Because it's at such a low level, especially after we have a new year, we have a continuous selling.
Right.
It's even lower
can
now.
the market rally without an earnings pickup? Is my question.
I think that will definitely help with earnings picked up. I mean, markets will still be going back to fundamentals. We're still looking for earnings recovery. I know the consensus on the market, it seems to be quite high, but that's probably not the consensus. That's not the level that investors are looking at. Investors are looking more like 10%, as a general market, looking at 10% EPS growth. However, if you are in, like I said earlier on, in certain segments, in certain quality names, you are looking at.
Yeah.
I know that I might be pulling your leg. I'm saying that growth that is EPS growth that around 20%.
Wow.
So the overall pessimism on China is masking, the opportunity that's offered.
Yeah.
If you are in selective sectors supported by the government, they are growing at close to 20%.
Yeah, tell us what sectors in particular. What's dirt cheap in your eyes right now?
What has been beaten down has been, I know, consumer. I know you might. Are you saying something that we do not know? Consumption has been weak, but even in the consumption space, we are able to find performers or winners for us last year. Guys that have a higher earnings visibility actually did quite well for us, and they are in consumption. So it's not all bad as well. I know renewable energy is another area that people are shining away from because of the overcapacity. But don't forget that certain segments are still doing quite well. The energy storage story is still very much intact. So they are looking at very good growth. So when you look at the macro level, it might be masking a lot of gems, a lot of interesting names.
So what are you guys overweight now?
We are still overweight to the consumption, but very selective. Like I said earlier on, we want to be in companies that are, have higher earnings visibility. Renewable energy as well, we're going with leaders. I mentioned earlier on about energy storage. Even the battery, I know, is going through a capacity issue as well, but there are also winners within that space. Healthcare. Healthcare definitely an area where perhaps if you're looking at the interest rate cut in the US, that could be beneficial to biotechnology names, and that could also be beneficial to companies that are serving biotech, namely, the contract research organization, those guys that help to do research for biotech companies. So there are pockets of interesting names. There's money to be made even in the bear market.
Absolutely. People seem to miss that point.
We need to stay positive. All right, Nicholas, thank you. Nicholas Yeo there, Aberdeen, head of China equities. Just checking in terms of what we're doing in iron ore here. We're falling for a fifth straight day. There was some data that came out from China. New home sales across 8 of those key Chinese cities almost halved in the first week of January. That was from some reports there. That's why we're seeing this sell-off when it comes to ore. So we're down 1.6% in Dalian. Singapore's down for a fifth day, as we mentioned, and we're watching some of these miners like BHP and Rio Tinto in Australia all falling in tandem there. And we're watching Japan. Another story there.
Yeah, so briefly, the Topics index. So the Nikkei was a yesterday store as far as the 34-year high. The Topics this morning actually topped the last September's peak to touch, but it's now slightly below that level. But effectively, we're trading at quarter-century highs on Japanese equity markets. So it's the land of the rising sun includes the land of the rising equity markets.
All right, coming up, we're talking a little bit more about Taiwan opposition KMT. The party there seeking to capitalize on a false missile alert that's raised anxiety levels just days ahead of the presidential election. Report from a rally for their candidate. Ho Yo-yi next. This is Bloomberg.
Right. Taiwan's relations with China are top of mind for voters. That's ahead of the elections, of course, coming on the weekend. Our colleague Stephen Engel reports from a rally for one of the opposition candidates from the traditionally friendly KMT party. Have a look.
It was a homecoming crush for opposition KMT presidential hopeful Ho Yo-yi as he rallied the faithful in his hometown of Jiayi in southern Taiwan. Ho and the other opposition candidate, Ke Wen-je of the Taiwan People's Party, or TPP, are making separate last-minute pushes to defeat the more independence-minded ruling DPP and its candidate, Vice President Lai Ching-te. It's a three-horse race for Saturday's election after the two opposition camps failed to form an alliance, a fraught union that could end up splitting the opposition vote.
I feel like the biggest room for cooperation between KMT and TPP will be the number of seats in the legislature. Our goals are the same, to switch the party in power. The DPP government has not been doing well for the past few years. People are more fearful.
That fear she's referring to was amplified Tuesday afternoon when cell phones island-wide blared emergency alerts erroneously saying that a Chinese missile had flown over Taiwan, and for citizens to be aware. The KMT was quick to latch on to the mistake.
When I first got the alert, I thought it was an earthquake. It turned out to be just a satellite. But the English in the message said it was a missile, so it made people panic. Even though the DPP came out and apologized, it never should have happened, especially now when the election is so intense. It made people feel threatened by China, as if they want to take over Taiwan. I feel like the DPP manufactured this fear.
These two KMT supporters felt the same way and see closer ties with China as a benefit, not a threat.
We need to keep good communication with the Chinese Communist Party so we won't have a war.
The two main opposition candidates agree that the DPP is putting Taiwan at risk and that they must diffuse tension across the Taiwan Strait. Now, on the other hand, they cannot show to the Taiwanese people ahead of this election that they're cozying up to Beijing too closely and that people could perceive that their efforts to get closer to China could put the long, hard-fought democracy and freedom here in Taiwan in jeopardy.
I think being closer with China for trade is not such a bad thing. But freedom of thought is what I want more. So I don't want to be closer with China.
It may be the very issue that decides the vote and sets the broader geopolitical tone in East Asia.
It's very, very important, this election, because it's life or death for the Republic of China. Because China is our roots. China and us are inseparable.
Stephen Engel, Bloomberg News, Jiayi, Taiwan.
That getup. Oh.
Yeah.
Adding so much color to Steve's package there.
Literally.
We're going to have a lot of color coming through here in the next few days. Special coverage from Taiwan all week in the lead up to the vote. Full results analysis on Friday and Monday as well. All right, from some more geopolitical stories that we're tracking for you today, China upgraded diplomatic ties with a record number of countries last year in a bid to rally support from the global south and counter the U.S. A Bloomberg analysis shows Beijing elevated the way it described ties with 17 countries and territories, including Syria, Ethiopia, and Venezuela. That's the highest number since President Xi Jinping took power over a decade ago. Doctors for U.S. Defense Secretary Lloyd Austin says he's been treated in hospital for complications from prostate cancer surgery. The disease was first detected in early December and surgery scheduled later that month. The White House admits it wasn't aware of Austin's condition until Tuesday. The House Armed Services Committee says it's launching a formal inquiry into Austin's failure to disclose his incapacitation.
Just ahead here on the shows, AI is very much in focus as tech giants and startups showcase their cutting-edge innovations at the CES taking place in Las Vegas. We hear from the boss of Hyundai's flying taxi project. That comes up next. This is Bloomberg.
All right, there's a lot going on at the CES in Las Vegas here right now. Qualcomm CEO says the company's push into automotive chips is on track to beat sales projections and had previously targeted auto unit revenue of around $4 billion by 2026. Speaking to us in Vegas, Amon says he's also optimistic about the growing role for mobile AI.
I'm believing the next user experience is going to be based on Gen AI on the phones, and we're optimistic that we can start to see devices as early as this year with those capabilities.
Okay.
And also at CES, Mobileye has unveiled an operating system called DXP, and it says it's designed to help automakers develop customized self-driving systems. The company says it'll allow car makers to share software more easily across more models rather than having to start over with each one.
Yeah. Also there at CES, Hyundai actually says it wants to begin initial testing of its, or test flights at least, of its electric air taxi by the end of this year. The CEO of the car maker Supernal unit, Shin Jae-won, spoke to us at the CES, of course, in Las Vegas, and explained how they plan to compete in this market for next generation transport.
We're very excited to unveil our product concept. What I mean by that is this concept design will become more or less final product that we are trying to get into market in 2028. And flying taxi, there are many names for it, but it is an airplane, and it is a hybrid between helicopter and fixed wing, like a 737. So it has wings, and then it's powered entirely by batteries. So that's what revolution is about this type of a vehicle. So it can take off and land vertically in a very small confined space. So like city populated areas. And then it's going to be very quiet compared to helicopter. And it has a good cruising efficiency because it has wings and no emission. So those are the very attractive features.
To get you to commercialization by 2028, how are you in the process, especially when it comes to submitting your application for certification to regulators? When and where can we expect those test flights?
Yeah, we believe the foremost important thing is to make this airplane safe. So this is for public consumption. So we have to make it as safe as possible. And so we're shooting for commercial aviation safety standards, which is amazing. So in order to go through that, we got to do a lot of flight testing and ground testing and so on. So our target date for entry into service, as I mentioned, is 2028. You back out from there, 2028, and we will try to fly full scale, what we call technology demonstrator, by the end of this year, 2024. And from that point on, we'll have a series of flight test program going through, and then finish the certification.
And you've applied for certification already? Not yet.
Middle of this year, we will apply for certification.
And it's just in the U.S. Do you have plans for other locations as well?
U.S. is undoubtedly, unarguably, I should say, the largest market for this type of vehicle or business. So we are certainly trying to open the markets, various locations in the U.S. And also we are looking at Europe, of course, and Asia as well.
Given your focus on the U.S. first, at least, is that why you're investing in a new manufacturing base? Can you tell us a little bit about potential locations, how much Hyundai is putting in here?
We are still studying the location, exact location, so it's too early to say where. But the strengths that we have, Supernal has, is we will be able to leverage and capitalize the tremendous mass manufacturing capability that Hyundai Motor Group has. So we are developing a lot of new manufacturing technologies as well, not just vehicle technologies. So depending on the making business sense and also where we open the market, we will decide the location later.
Inflation preview. That was the Supernal CEO and president of Hyundai Motor Group, Shin Jae-won, with our colleague Sherry An at CES in Las Vegas. All right, taking away a break from flying taxis to now these flying
Flying
Bitcoin,
cryptos.
I guess. Yeah, flying back and forth, up and down. We're 1% gains now when it comes to Bitcoin in the Asia session, but certainly it's been a roller coaster in just the last 4 or 5 hours on that confusion about that tweet, or X, I should say, that was sent out from the SEC. So, no, they have not approved this spot Bitcoin ETF
yet.
and the stocks are certainly moving because of that.
Well, at least we now know how the world feels about it, because we had a split second where, everyone was like, it's out.
And it's just to show how sensitive, right, the market is to this hype around
Maybe
this
selling the
ETF.
news. Yeah, a lot of weakness coming through across some of the crypto-related equities in this part of the world.
Yeah.
So we're still on watch for that approval, suffice to say here. Okay, now going into, of course, this fresh year, our colleagues at Bloomberg Intelligence have unveiled their list of the top 50 global companies to keep an eye on this year, and across the region, of course, a lot of the companies here to make the list include the likes of BYD, you have Galaxy Entertainment, you have Anta Sports, and we'll certainly have more on that in the next hour.